Hello there. How are you? Hope you're doing fine. Making this video for you guys. So let's get started with the new video about triangle. All right. So let's get started here. This is the main chart that I've been showing in this course from the beginning. That this is how Elliott wave unfolds. You have a 1, 2, 3, 4, 5. We are going to the upside bullish count, right? And then A, B, C correction. Now, all these waves also have 5 or 3 subwaves in it, right? So wave 1, wave 3, and wave 5, you already learned that these are impulse waves. And wave 2 and what do we call wave 2, wave 4, and wave B are the corrective wave. Now, this whole wave 1 is also called, since it's wave 1, these are subwaves, right? And then subwaves also have subwaves, right? But this whole wave is called impulse, and this whole bracketed wave 2 is called corrective wave. So this one, you can see here, this is a correction, wave 2 is a correction, and wave 4 is a correction, right? Now, the correction comes in 3 different ways, commonly 3 different ways. The first one is a zigzag, and which is very simple. We already saw the video about that, right? And then the other one is called a flat. You have 3 common type of flats, right? Regular flat, and then expanded flat, and running flat. Now there is the third kind of correction is called triangle, right? And we have different triangles. We have 4 or 5 different kind of triangles. I think 5, right? So let's get started. We're going to be seeing that wave either 2 or 4. Now, wave 2 usually have 90% of the time you will see the wave 2 have zigzag correction, right? Wave 4 and wave B sometimes, wave 4 most of the time will have either flat correction or triangle correction. Okay, so we already studied the flat corrections. Now let's go take a look at the flat, triangle correction. What the heck is that? Now this is another chart representing these. This is wave 1, 2, and this is ABC zigzag correction here, right? Then you have 1, 2, 3, 4, 5 subwaves with 3, wave 3 complete. Now, instead of a flat here, you fall into a triangle. And triangle has commonly 90% of the time, the triangle has 5 legs. You can see here A, B, C, D, and E, right? So this is how they unfold. The wave after finishing wave 3, which is usually commonly 161% of wave 1, starting from wave 2, goes all the way to 161%. Then it falls into wave A, then goes up B, C, D, E. Now, until it is completed, you don't know. Nobody knows there is going to be a triangle. So what are the possibilities? When you have this wave A around like 23% of, or maybe 30%, 38% of this wave 3, right? You know exactly that is wave A. Then maybe you'll go back up all the way, or maybe you'll come back in posting like a flat ABC, right? So now what happened is that after A, it goes up for B, but don't make a higher high, and then start to come down. So now we know that this is the only possibility that we have is for a regular flat, where C will come down a little bit below than A, right? So we're waiting for that to come here, and after that you can go long from here. But you will notice that around maybe like 61% or 78%. Sometimes it's 78%, and then all the legs will be 78% of each other. Or 61% triangle, right? So this after A, the B will go either 61% or 78% of this A. Then it will come down and around 61 or 78%, it will go back up instead of coming down here. So now, then and there, you know that this is not going to be a regular flat. Then it might just go all the way to the upside. So you go long here, only to find out that this will stop here around 61 or 78% and then start dropping. Either you cash out from your trade or let the SL hit. Then it comes down here, and then you see that, okay, if this is A, B, C, and we are not going to the upside, and right here is D, and then we are coming back for E, right? And that's where you know that you might have a triangle forming, and you might be able to go long from here. So when you wait cautiously, and then you find that right here, this rising teal. See, this is a contracting triangle. Contracting triangle means I'm just showing you this one, just a general picture of a triangle. Basically, the contracting triangle is this. This is what the subwave, with the subwave and all of that. Wave 3, then you have A, B, C, A, then A, B, C, B, all you have 3, 3, 3, 3, 3, right? 3 subwaves. Then A, B, C, C, then D, and then E. And after that, this wave 4 is finished here, and then it goes to the upside. This is what we call bullish contracting triangle. Why? Because you have the wave 3 bullish, then sideways correction, and then end up going to the upside again. Triangle, we will break out from the triangle, and then we will go to the upside, right? So that is what it is a bullish contract triangle, because these both trend lines, the sloping and the rising, are contracting, right? So that's what it is. And subwaves are 3, 3, 3, 3, 3. So now you know that this is how wave 4 triangle happen, and usually it is within the 38% of wave 3. So when after a big wave, when the price drop and then start to go up, let's say we are watching something on the 4-hour chart, right? Or my chart, the 40-minute chart. So when I have a reversal candle here on my 40-minute chart, then my strategy or my system is what? Then I go to my 7-minute or 20-minute chart to find a long entry. Either one of them I will take, right? And then go long. Until we don't, if we don't have a reversal candle, I don't look for long. So I have to have a reversal candle on the 40-minute chart, and then we make entry from there. Now you make an entry, and then it comes back down, right? Then you are safe because you already moved your asset to break even. Then you go and do the same thing here again. Why you keep going long? Because the trend is long. This is long. This is long. You know that this is a correction, and this has to be a correction. And then we will end up. And then higher time frame. Usually, I make my weekly charts, showing the direction and the target, the destination, right? So it's usually to the upside. So we know that we need to go to the upside. So you go long, long here, long here, long here. Finally, this long will prevail, and you will go all the way to wave 5. So this is how the contracting triangle work on the sideway. The subwaves are 3, 3, 3, 3, 3, 3. Either it's going to be a 61% triangle or a 78% triangle. Means each leg is either 61 to the previous one, or the 78% to the previous one. So wave 1, then this wave B will be 61 or 78 of wave A. Wave C will be 61% or 78% of B, and D is also 61 or 78%, or E also 61 or 78%, and then it will break the triangle and go to the upside, right? So using my strategy, this is how we trade this. Now this is a bullish, just like same thing, but the upside down would be bearish. Simple as that, right? So it drop here, then it goes up, A, B, C, D, E. This is a bearish contracting triangle. Again, this is a rising TL, and this is a sloping TL, right? And then after that, the breakout goes to the downside. So this is how this wave 4 triangle unfolds, right? It's very easy. You'll find it a lot of places. And I will not give the example here because I need to make some more videos, and then I will leave this on your for you as a homework, right? So go and look. Maybe in the second or third video, I will give some examples as well, right? Different triangles. So bye for now. And this one, in the next video, you will see expanded triangle, right? So this is you know, the bullish and then bearish triangle, right? Bullish and bearish, bullish or bearish contracting triangle, right? And how to find them and how to trade them. This is usually comes in wave 4, 38% of wave 4, and each leg is 61% or 78% of the previous leg. And in this case of this, wave 3 is down, right? So you, what you do is that you go after 3-wave correction, small 3 waves of waves, you see that, so you have a reversal candle here, you go short with either 7-minute chart or 20-minute chart, and just do the same thing here, and finally you do the same thing here, and then you have a big trade, right? So this is it for now, and we'll go from here to the next video, right? So, and if you still have a problem, you might want to say, you know, if you are my subscriber, then it's fine. You have my strategy, my system as well. If you don't have it, then you go my website, if you want to, and then you can subscribe monthly, where you will be able to attend my webinars twice a week, where I share my charts, my setups, weekly charts, and all of that. And then you know, you have my email support. Any question you need to ask, and you know, it's a lot more to learn. And you know, just simply one trade with my system. Like for example, today alone, you see this on the 15th May, right? Today 16 is starting 3 a.m. But yesterday I had this pound USD for 130 pip with one standard lot. This is $1,300. Then I have this one as well. 120 pip euro USD. Same day, 15th May 2024, yesterday. So that's $1,200. One standard lot. Even 1 minute lot, $120 here and $130 here. Just in one day trading, your course is paid off. All right. So similarly, if you you know, subscribe monthly or yearly or whatever, monthly subscription is only 77. You know, you will make more than that within a week. Right? And then you have rest of the month to enjoy. Right? We have options like, you know, big discount for yearly subscription or one-on-one coaching and all of that. So this is it for now, and I'll see you in the next video.